Scariest California housing market crash just got worse. Have you been keeping up with California's housing market? If not, you're in for a shock. The housing market crash just got worse, and the numbers are staggering. Home sales have dropped by a historic 33% on a year-over-year basis, with prices plummeting to a 2-year low. This decline is worse than the national average, and it's not just limited to lower-priced homes. Even houses selling for over $2 million have experienced a drastic decrease in sales. The pending home sales have also decreased, indicating fewer contracts being signed between buyers and sellers. Stay tuned for more information on this dire situation and how it could affect you. With that being said, I have a lot of information to share regarding California's housing market. According to a report posted on March 16th, the lowest interest rates in 5 months have helped boost California home sales. For the first time in 4 months, home sales in California have exceeded a 250,000 unit pace, with an annualized rate of 284,000. In January, the average interest rates were between 6 to 6.2%, which affected February's home sales. As of mid-March, interest rates were hovering around 6.5 to 7%. In February, the sales pace of existing single-family homes in California was 284,010, representing the total number of houses that would sell over the next 12 months given the current sales pace for February. February's sales pace increased by 17.6% compared to January, but it was still down 33.2% compared to the same period last year. It is crucial to pay attention to the significant drop in pending home sales, which have decreased by approximately 35% on a year-over-year basis, indicating fewer contracts being signed between buyers and sellers. This is a lagging indicator of the housing market, reflecting the conditions 1 month ago when interest rates were at 6 to 6.2%. However, rates decreased to 6% in early February and rose to 7% by the end of the month, which likely explains the decline in contracts being signed between buyers and sellers. The pending home sales for homes priced above $2 million have been steadily increasing since January, while virtually all other price segments, except for those below $300,000, have experienced a decline in sales compared to 1 month ago. The reports for February and March are yet to be published, and it is crucial to stay updated on these developments. Here's another perspective on the matter. The chart compares pending home sales for different price segments, with a significant surge of 63.6% for homes over $2 million, while other price ranges also experienced increases, but not as substantial as this one. Additionally, the California Association of Realtors noted that pending sales typically rise across all price ranges during the spring season due to market seasonality. Now, let's delve into home prices in California. According to the data presented, the median home sale price in February was just over $735,000, representing a 2.1% decline from January and a 4.8% decrease from 12 months prior. For further analysis, I extracted data from the California Association of Realtors website, specifically for existing single-family detached homes, excluding new constructions. I included viewer and month-to-month changes, compared current trends to pre-pandemic levels, and even provided a glimpse into price trends in 2008 for entertainment purposes. Let's take a closer look at this. The median store price has decreased by 4.8% on a year-over-year basis and 2.1% compared to January, currently sitting at $735,000. This marks a 2-year low for home prices in California, as the last time prices were this low was in February 2021 at $699,000. In the past 9 months, home prices have decreased in 8 of them statewide and for 6 consecutive months, excluding May of 2022, which was the onset of COVID-19. November saw the first year-over-year decrease in home prices since February 2012. This marks the first time prices have decreased on a year-over-year basis in 129 months, or nearly 11 years. Currently, home sold prices have decreased on a year-over-year basis for 4 consecutive months. Excluding the onset of COVID-19 back in May of 2020, the last 4 months are the only months that prices are down on a year-over-year basis going back to February 2012. The last time prices decreased compared to 12 months ago was in February 2011, at a decrease of 0.9%. Additionally, home sold prices are down by 4.8% compared to February of 2022, marking the largest decrease since December 2011, when prices decreased by 5.2% compared to December 2010. Hold on. on, there's more to share. I want to compare the changes in home prices to previous years, particularly pre-COVID levels. The peak was in May of 2022, which set a record high for home prices in California at a staggering $900,000. However, as of February this year, prices have dropped by 18%, equivalent to a substantial decrease of $165,000, bringing the average to approximately $735,000. It's worth noting that this 18% decline compared to last year's peak is worse than the national average, which is currently at a 10% decrease. Let's take a look at the changes in home prices between May 2019 and February 2020. During that period, prices dropped by 5.1%, whereas this year the decrease has been more significant at 18%. In comparison, from May 2018 to February 2019, prices dropped by 11.1%. To put it simply, the decrease in home prices from last year's high is much worse than pre-COVID levels in 2018 and 2019, and it's worth noting that the decreases in 2008 were even more significant. In 2008, prices decreased by a whopping 36.6%, whereas this year the decrease was 18%. Looking at the median sold price in California, prices were only up 5% compared to 2 years ago, and increased by only 1% in 2022. The sale price to final list price ratio for February was 90.37%, which means houses sold for an average of 2.3% below the seller's final list price. Only 27.6% of houses sold above the seller's asking price in February, with approximately 72% selling at or below the asking price. The majority of sold houses were sold below the seller's asking price, which is a significant difference from 12 months ago, when over 71% of houses sold for over the asking price. Additionally, the number of active listings or houses for sale has decreased for the 5th consecutive month as of February. While there are still more houses for sale compared to last year in 2021, the current levels are significantly lower than pre-COVID levels in February 2020, with around 35,000 houses for sale then compared to approximately 20,000 now. In February 2019, there were about 45,000 houses for sale, but now there are only around 20,000. Despite the increase in the number of houses for sale in recent years, the current number is historically low. Additionally, the growth of active listings has slowed down significantly since May 2022, with only a 38.2% year-over-year increase in February 2023, compared to over 60% in the same period last year. One reason for this is the decrease in new listings, which fell by 24.6% year-over-year, resulting in 25 fewer new listings compared to the previous year. Specifically, there were approximately 12,500 new listings in February 2023 compared to 16,500 in February 2022 and 17,290 in 2021. Pre-COVID levels in February 2020 and 2021 saw around 21,000 new listings hit the market each month. The housing supply in California has increased by 38.2%, but there has been a notable decrease in new listings every month for the past 8 months. Additionally, according to the California Association of Realtors, there has been a high percentage of reduced price listings at 32.7%, which has decreased since last summer, but is still historically significant. Looking at national data from altosresearch.com, the share of price drops is at 31%, while in California, it is at 26.18% for the week of March the 10th, 2023. This is well below the peak of 43% and the lowest it has been since June 2022. Although the share of price drops in California has decreased since December 2022, it is still high at 26% compared to the past few years, but similar to pre-pandemic levels in 2019. The current levels are higher than last year's 13%, but lower than March 2020's 22%. Overall, the current price reduction levels are comparable to 2019. As we wrap up this video on California's housing market, it's essential to remember that these are just numbers, and they can fluctuate. However, with the current trends, it's evident that the market is not in good shape. As a potential buyer or seller, it's crucial to stay informed and up to date on the latest market trends to make informed decisions. If you enjoyed this video, please don't forget to hit the like button and subscribe to our channel for more real estate insights and analysis. And if you have any questions or comments, feel free to leave them in the comments section below. Thank you for watching this video on the California housing market crash. Don't forget to like and subscribe for more informative content.